Welcome back to Startup Accounting 101. It's a video series for founders to understand accounting fundamentals for running a business. We're moving through this financial projections template. It is available for free from score.org. Just go to their template gallery, find and download this file. I'll have their link in the description below. This video, we're covering tab 5B, which is the operating expenses from years 1 to 3. The annual totals here in column C for year 1, they come from the prior tab. So from year 1, the annual totals in column O, each individual expense category has a total. Also, the total expenses subtotal is here, as well as other expenses and the total other expenses. So these two subtotals add up together to give us the total fixed operating expenses for the year. So for year 1, this annual total is getting pushed out to column C here. And so this establishes year 1 operating expenses. And the growth rate from 1 to 2 and from year 2 to 3. In this template, there's an opportunity to adjust every single line individually and independent of each other, which is a little bit different from the sales forecast. There's one number, one growth rate over the entire year versus in operating expenses, you have the opportunity to be a little bit more granular with the changes. Right now, they're set up between 3 and 5% growth. And the year over year, so from 1 to 2, 2 to 3, so year over year, the growth rate, it can vary significantly depending on the industry that you're in, the company, and especially if you're a startup. So if you go back to payroll, you see from the payroll grows like 50% from years 1 to 2. From 2 to 3, it's 150%. So for startups, it could drastically increase. But if you have any sort of historical data, you can put that in here. If you don't, you can keep the default provided. Since these are fixed costs, they shouldn't change all that much. But again, if you are a startup, especially, you might want to increase the growth rate as the company ramps up. This particular row, miscellaneous row, I put in trade. That's where I slotted in my trade spend. And this particular expense, it tends to increase with sales. Especially if it's like a chargeback or something like that. In other words, like a coupon at the register. So if it's like $1 off the purchase, this type of deduction is actually closer to a variable cost than a fixed cost. So for this one, if I go back to the sales forecast, I do have a number here. And what I'm going to do is I'm going to make the growth rate for trade similar to sales. So we've got 33 and 83 right now. So let's go, I would probably mimic that just because, they will kind of grow together. So this is an example of if you have any sort of information to justify adjusting the growth rate, you're going to go ahead and do that now. And with other expenses, everything is kind of driven by, the formulas and all the other tabs. I do notice that the bad debt expense which is really a 2% prepayment discount for my net term customers. There's numbers missing from years 2 and 3. So I'm actually just going to fill those in. And that, let's see, this is coming from here. That income statement. Okay, so these are coming from the income statement, which is here. So this is the bad debt line. So these three numbers actually need to come into the expense tab. And when I'm referencing two different tabs, instead of clicking over into the different tabs back and forth, one of the things I like to do is I like to create a new window. And I usually work on a dual monitor setup, so this would be on the other monitor. But for this video, I'm going to try to put them onto the same window. So this would be one tab that I can look at. And the reference of what I want to look at is this one. I'm already here. All right, I'm already here. So it's these three numbers. So here I have the first column. The second, I want this number. So I can just say equals, I want it to grab this number here. And when I do that, it's grabbing the reference, which is this tab. E55 is the cell. So once I do that, it's just going to grab over this number. And I'm going to do the same thing on the other one. I'm just going to go equals the number that I want, which is this, G55. So with that, I'm finished referencing the other tab, so I can close a window. So you can open as many windows as you want. It's easy for me if you're especially working with a spreadsheet that has a ton of tabs like this. If you're referencing 2 or 3 different tabs, you can open up a different tab in a different window, and it just makes things a little bit more efficient. So this has been completed. So we've got an other expense total, and here are the total fixed operating expenses for basically year 1, 2, and 3. So the total amount is here in row 36. So now we've completed the forecast, the operating expense forecast for year 1, 2, and 3. The next videos coming out will be looking at cash flow. So like and comment if you enjoyed the video. Please subscribe, and thanks for watching.